Welcome back, everybody. So I'm doing another video, and this video is going to be if it makes sense to do ICT, so trade ICT, or if you should trade support and resistance. So I'm going to get into that here in a second. Let me start pulling up my trading view and share my screen. So here's my screen. My take on this is there's a lot of people that are ICT traders bashing support and resistance. There's a lot of support and resistance bashing ICT. My thing is, if you truly dive into like both ways of trading, why not just implement both and see what your results are? That's that's what I did. I looked at both. I studied both ICT. I studied support and resistance from top people in the industry, and now we're starting to get places. So the results are being worked on. Let's say that like the results are being worked on. So we're definitely getting better. Take some progress, but I'm definitely seeing some progress. Now the difference that I want to talk about ICT people are, fair value gap, imbalance, breaker structure, market structure shift, a breaker. So people are familiar who trade ICT, they're familiar with that type of language. And then support and resistance, break and retest, head and shoulders, um, continuation patterns, etc. I'll share my screen or it's sharing right now, so I'll get into the importance of the market. The importance of the market is if we're looking at ICT traders, it's okay. So this is a breaker structure after price made add that to favorites. Price made a high, then a higher low, broke structure by closing above. So this would be a higher high, higher low, price break structure again, higher low, higher high, higher low, higher high, break structure again. I'll wait until I'm done. Higher low, higher high, higher high, higher low, higher high, higher low, higher high. Then there's a market structure shift. It's like walking up a staircase and then the staircase ends up being invalid. So you start going from an uptrend into a downtrend. That's what creates the market structure shift. However, the break of structure, you can see it's still in a continuation pattern moving up until it gets to a point where it starts bringing you down. That's when it becomes a market structure shift. So I'm going to start labeling this now, and I'm going to finish putting the breaker structure and then one more break of the structure. Breaker structure, breaker structure, breaker structure, breaker structure, breaker structure, and breaker structure. Then market structure shift. So this is going to be the basics. This is the basics of becoming a profitable trader. And as you can see, this is what gives you better risk to rewards than virtually everyone else. Because if you're entering on 50% or 75% of the pullback, then you could be looking at a 1 to 2 at least, which gives you an edge. And when you're trading, no matter what type of trader you are, you're looking for an edge. And once you get an edge, that already gives you more than a heads or tails response to your results. For example, if I was to put this here, you can see if I targeted the, that's about a 1 to 1. If you held it, that's about a 1 to a little over 2. But yeah, that's the difference between, breaker structure and market structure shift. Then when you're looking at support and resistance, support and resistance would be something like this right here. This is support and resistance. So you're going to see there's a key area where price just keeps on hitting. So it seems like price is attracted to these specific key areas around 57, call it like, 57.400. Now, support and resistance people are going to be looking for these key levels. And then if price breaks, does the market structure shift, comes and tests that area, then they'll short it. And then they'll pretty much, target an area that seems like it has, some good amount of liquidity. So this is 1 to what type of ratio? Could be 1 to 16 to take out all these lows, or 1 to 9. But yeah, that's the biggest difference between, ICT and support and resistance. Keep in mind though, I'm not saying which one's better, but they're virtually the same, and the same way that you're trading ICT, you can still take the same type of trade using support and resistance. You just have to understand the order flow of the market. So I hope you guys enjoyed this video. Like, comment, subscribe, comment if you have any questions.